What's going on, everyone? Welcome back. Moving on to another video. This is a question that we have to solve. So ABC Incorporated has provided the following information for March. So notice all of this over here, this list. Sales commissions are 5%, and we have to take all of that, prepare a statement of cost of goods manufactured, statement of cost of goods sold, and an income statement. Now, if you don't feel like writing all of this out here, I left a link in the description box to a handout for this question where you could print all of this out. It's already written out for you, so you don't have to waste time writing it all out. You can just go ahead and answer the question. Follow me along in the video. Now, we have to prepare three statements: cost of goods manufactured, cost of goods sold, and an income statement. And in previous videos, I showed you how the statement of cost of goods manufactured is the first one that goes. So that's the first one we have to prepare. Then we have to prepare a statement of cost of goods sold, and then the income statement. Now, if you remember when I talked about the statement of cost of goods manufactured, I mentioned that its format is coming from the two equations that we discussed in the manufacturing flow video, right? So there were a bunch of equations, but the first two are the ones that deal with the statement of cost of goods manufactured. So I wrote them out here. We got the raw materials at the beginning plus the purchases of raw materials minus direct materials equals the raw materials at the end. And then we got the work in process at the beginning plus the direct materials, which flow from here, plus the direct labor, plus the manufacturing overhead, minus cost of goods manufactured. That gives us the work in process at the end. So what I recommend before doing any statements is actually just filling out these equations on the flow chart. So let's start over here. Notice that raw materials at the beginning, since we're dealing with the month of March, the beginning of that period is going to be March 1st. So if you look down this list here, we got raw materials, March 1st, 300,000. So this here is going to be 300,000, right? So this over here, we could sort of like cross that out off the list. And then we're going to have purchases of raw materials. If you look at the list, that's over here, right? So the 150,000. And then direct materials, if you look at the list, there's actually no direct materials. We're actually going to have to solve for that here, because notice that we're given the raw materials at the end of the period. So the raw materials at the end would be the raw materials at March 31st, and that's given over here. So that's 80,000. So the direct materials we're going to be solving for, let's put an X there. And then the raw materials at the end is going to be 80,000 right there. Okay, so even from here, we can already start the statement of cost of goods manufactured. So let me actually write the statement over here. So the way you set it up is you first write the company name, so ABC Incorporated. And then this is going to be a statement of cost of goods manufactured. Now you wouldn't write the short form, you would actually write out cost of goods manufactured. I'm just saving myself some room here. And then we would write that this is going to be for the month of March. Right? As I mentioned before, you're looking at a whole period of time, a whole interval, instead of a specific point in time like a balance sheet does. This is more like an income statement almost. So from here, if you remember when I talked about the statement, we have to write all of this out first. So we would start off with the raw materials. Actually, first we would make a heading. So let's make a heading: direct materials. And we would start off with the raw materials at March 1st, basically the beginning raw materials. And the beginning raw materials is 300,000. And then we would, We would add the purchases, right? So plus purchases and that's going to be 150,000. And then to get this X value here, what we did was we brought it over to the right side to isolate for it, and then we brought this raw materials at the end over to the left, so we'd be minusing it from these two numbers that we're adding. So it would be less raw materials, I'm going to write in short form, for March 31st, right? The ending raw materials, and that's the 80,000 there. And so when you net all of this out, we would end up getting our direct materials. And sometimes it's called, on the statement, it's called direct materials used. Right? So when you do all of that, 300 plus 150, that gives us 450,000. Minus the 80,000, that would give us, what? 370? 1,000 for the direct materials used. And once we're done with that over here, we move on to the second equation in the flow chart. So the raw materials at the end, I forgot to cross this out, so we already used that on the list. And so we just keep going. So now we have the work in process at the beginning. Let's write that out over here. The work in process at the beginning is where? That's over here. The work in process at March 1st. So that's 120,000. So that's going to go here. We got our direct materials used, which we already know. That's 370. I'll just write 370K here. And then the direct labor on the list, it's given over here. Right? It's just a number there, 90K. Now, plus manufacturing overhead, this one's going to be a little bit more tricky because notice that we're given a bunch of stuff for the manufacturing overhead. Basically, if you remember manufacturing overhead, when I talked about product costs versus period costs, it's any product costs that are not direct materials or direct labor, but they're still being incurred in the factory. So notice this indirect labor, the depreciation on the factory equipment, the depreciation on the factory building, the factory utilities, and I think that is it. Oh, and the indirect materials right there, right? So there's a bunch of stuff for the manufacturing overhead. So I'm going to make a list on the side here. It's basically the indirect labor, 30,000. We got the depreciation on the factory equipment, so 10,000. We got the depreciation on the factory building, which is 70,000. Factory utilities, which is 30,000. And then the indirect materials of 20,000. Right? So there's a lot going on for the manufacturing overhead. We're going to have to write all of that out. And then we have the minus cost of goods manufactured, which is actually not given. We're going to actually have to solve for that because we are given the work in process at the end. The work in process, March 31st, it's this 220,000. Right, so a little bit messy over here, especially with this list on the side. But I just like to make this list on the side when I'm making this statement because it just allows me to organize everything. Take the list and actually put it into some kind of format, and then we could put it into the statement. Now, if you remember the statement of cost of goods manufactured, after this direct materials used here, we write these three things. So we would write the direct labor, that would come next. And the direct labor is the 90,000. And then what we have to do is we have to write the manufacturing overhead. I'm going to just write over as a short form. The manufacturing overhead is basically these 5 items here, basically all of the costs incurred within the factory. So the manufacturing overhead can be pretty tricky if you're given a big list like this because you have to actually find what are those costs incurred in the factory. It's not going to be given usually as one figure. So we said again, it's an indirect labor, the depreciation on the factory equipment, depreciation on the factory building, the factory utilities, and then the indirect materials. Now, depending on your prof, they may want you to write out a list of all of the stuff for the manufacturing overhead. So they may want you to write out over here like indirect materials. And then put that figure there, and then indirect labor. Put that figure there. Because I'm kind of running out of room here, I'm not going to do that. I'm going to put just this total for manufacturing overhead. So I'm going to total these numbers over here. But if you do have to write out a statement where you list those items, make sure you do that. Make sure you list them and then you just total the manufacturing overhead. So if I total all of these, 30 plus 10 is 40, plus 70 is 110, plus 30 is 140, plus 20 is 160. So I know my manufacturing overhead in total is 160,000. And again, it's the indirect labor, it's the depreciation on the factory equipment, it's the depreciation on the factory building, it's the factory utilities, and it's the indirect materials. And then once you have these three items here, you can add the work in process at the beginning, and then we could subtract the work in process at the end to get that cost of goods manufactured, which is the number we are going for, right? This is a statement of cost of goods manufactured. Now, a lot of times they'll actually total these three numbers separately, these three items here, and they'll call it total manufacturing costs. Right? So if you total all of that up, 370 plus 90 plus 160, that would give you, what, 620,000 as a total manufacturing cost, right there. And then what you do is you add the work in process at March 1st, right, the beginning work in process. And if you look at the list, where is that going to be? That is, oh, sorry, we already had that over here. So 120,000, I already crossed it off the list. So the 120,000, and then we subtract the work in process at the end, which would be March 31st. So that is over here, the 220,000. And then when you net all of that out, you end up getting that cost of goods manufactured, which is what we are trying to get to. So you do the 620,000 plus 120, that would give us 740, and then 740 minus 220, that gives us 520,000. So that right there is your cost of goods manufactured, right? So kind of tedious. Keep the flow chart in mind. Take all of the values, put them in the flow chart, and then make the statement. And then remember this manufacturing overhead. Sometimes your prof may want you to list out all of the items in the manufacturing overhead, right? So like the indirect materials, indirect labor, basically anything that's happening in the factory. But sometimes they just want you to put the total amount. You can maybe list out the items on the side, total them up like I did, and then you end up getting that cost of goods manufactured at the end. Next up on the list is the statement of cost of goods sold. And the statement of cost of goods sold starts off with the cost of goods manufactured, which we just figured out in the previous statement. That was the 520,000. So I already wrote that right there. And the statement of cost of goods sold, it basically deals with this formula from the flow chart, which is the formula after the work in process one, which we already used. So let's go through the list here and fill these out. So the finished goods at the beginning, the finished goods at March 1st, notice that's the last item, the 310,000. And then the cost of goods manufactured, we already know that's 520,000, right? We figured that out in the previous statement. Cost of goods sold, we don't know. We're actually going to figure that out because notice we're given the finished goods at the end of the period, the March 31st. So that's 245,000 right there. Okay, so we got to rearrange this to make the statement of cost of goods sold. And then we've used this and we've used that. And then notice the stuff that's remaining: sale office salaries, depreciation on the headquarters building, the sales, the headquarters utilities. That's all income statement items. So all of the expenses, they're basically period costs. They're not product costs. If you remember the video, I differentiated between the two, product costs and period costs. So you pretty much want to leave the period costs to the end because they're all going to go in the last statement, the income statement that you're going to deal with. So statement of cost of goods sold, we got the cost of goods manufactured. And then if you remember, we add the finished goods at the beginning. So we go plus finished goods. I'm going to put the date over here. So March 1st. The finished goods at the beginning were 310,000. And a lot of times they like to sum these two numbers up and call this goods available for sale. So we would end up with 830,000, right, if we total these up. And then what we do to isolate for this cost of goods sold, we bring this over, we bring this finished goods at the end over, it becomes a negative, so we would have less finished goods at March 31st. So that's the 245,000 right there. And we would end up then with our cost of goods sold. And when you total that up, you end up getting 585,000. 830,000 minus 245 gives you 585,000. So that is the cost of goods sold. And that's going to flow right onto the income statement. So the income statement I'm actually going to make over here. So we got ABC Incorporated. We got the income statement. And this is going to be for month of March. Okay, so the income statement, there's going to be different formats that you're going to run into depending on what textbook you're using. I'm going to use a certain format. Basically, the order is the same. So the first thing that comes up on the income statement is the revenue or the sales. This could also be called revenue. Right, so look out for that in questions given. And the sales here, that's 1,100,000. Then we have the cost of goods sold, which we just got there, right? So that's 585,000. You can actually net these out over here to get your gross profit. So that would be what, 515,000. And then from here, what you want to do is you want to subtract basically all of your remaining period costs. So this sales revenue I just used. So again, different orders. It could be different formats. They may take all of the selling expenses and group them together, and then the depreciation and general admin expenses may group them together. I'm just going to list them out. So we're going to have the sales salaries. That is 80,000. And then, if you remember over here, there are sales commissions as well. So whenever you see sales commissions, they give you a percentage. That's going to go, that's a period cost. That goes under the income statement as well. So sales commissions, what you would do is you would take that percentage of the sales, right? The gross sales, the revenue. So 5% of 110,000, that is 55,000. right? So on top of the salaries for your sales team, you also have to pay them a commission depending on how much sales they bring in. And then there is, so we dealt with that. Then there's the headquarters, let's call it HQ, depreciation. Right, so that's not factory, that's headquarters. Again, that's a period cost. Mentioned that before as well in the period versus product cost video. That's $110,000. And then last item remaining, so we dealt with that. We got the headquarters utilities, right? So we got the headquarters utilities. And again, this doesn't have to be headquarters. It could be like dealership utilities, right? If you have like a car company, the dealership, if you remember, that's not part of the factory. Basically, any buildings in the company that are not the factory, they are going over here, whether they're depreciation, their utilities, etc., etc. And then other sort of salaries of the company that are not within the factory. So the headquarter utilities, those are $20,000. And they didn't talk about taxes or anything like that, so let's just make a heading for net income over here. And when you net all of this out, when you take the gross profit, subtract all these expenses, you would end up getting net income of $250,000. Right? So that there is your income statement. And again, it may be in different formats depending on what your prof wants you to do. They may want you to group the sales expenses together and then the general and admin expenses together, or your textbook, right? But the final number is going to be the same. And then also, this may not be net income. This may be like operating income, because as I mentioned, they didn't give you the taxes or maybe the interest on the debt paid. Right? So this may be called operating income. I just decided to call it net income. Right? So when you're given a question like this with all of this kind of stuff listed out, make the flow chart first, fill everything in, and then from the flow chart make the statements. First comes the statement of cost of goods manufactured, then the statement of cost of goods sold, and then the income statement.